Good afternoon / good evening, everyone. Thank you so much for joining us for part 2 of our financial considerations webinar series hosted by the Bronx Chamber of Commerce and the Bronx Overall Economic Development Corporation. I'm just going to give it another minute or so for everyone to trickle in, and then we'll get started. Seeing some familiar names from last time. Thanks so much for rejoining us for part 2 today. Just going to give it another minute or so, and then we'll kick off. All right, we're at 5:03, so we are going to get started. Hello again. Thank you everyone for joining us. My name is Sarah Benizio. I work with the Bronx Chamber of Commerce. We are your business advocacy and networking organization based right here in the Bronx at 1200 Waters Place. Visit us at bronxchamber.org for more on our upcoming programs, webinars, events, and more. I'm joined today by my colleague, Francisco Aguilar. He is our Bronx Chamber of Commerce membership manager, and he'll tell you a little bit more about where he came from and how this webinar series came to be.
Hi, everyone, and good evening, and welcome to our second part of our financial considerations webinar. As Sarah's mentioned, I am Francisco, and I'm the membership manager here with the Bronx Chamber of Commerce. I started off my role here at the Chamber as a small business recovery specialist, however, and that was within a program called the NYC Small Business Resource Network. And that program gives any small business within the 5 boroughs access to different resources regarding financing help, technology improvements, marketing assistance, and legal help. So if you're at all interested in any of those services, please visit smallbiz.nyc, or you can give us a call here at the Chamber and we could connect you with one of our specialists. I'd like to welcome Michael Nixon with the BOEDC, as we have been partnering with them to put on these webinars.
Okay, thank you very much, Francisco. Hello, everyone. I'm Michael Nixon from the Bronx Overall Economic Development Corporation. We're very pleased to be part of this webinar series, and I think the topics this evening regarding legal issues and taxes are of great interest to many of the businesses. Bronx Overall Economic Development Corporation is a 501c3 organization, so a nonprofit organization focused on economic development in the Bronx, and we also provide economic support for the Bronx Borough President's Office. So we are lenders. We lend money to Bronx-based businesses. We help businesses that are looking for real estate in the borough. We offer some technical assistance. We have an SBA arm, SBA 504, for businesses that are interested in purchasing owner-occupied commercial real estate. We have a satellite office of the New York State Department of Labor in our offices. In the event that your business is looking for staff, they can help with that process at no cost to you. And then prior to the pandemic, we had a satellite office of SCorp, Service Corps Retired Executives, and we still maintain connections with that organization. So we're here to provide assistance to Bronx-based businesses in any way that we can throughout the entire Bronx. And again, it's a pleasure to be able to help put on these this series of webinars. So without further ado, I will turn it back over to Sarah and Francisco of the New Bronx Chamber of Commerce, and then to our speakers. Thank you.
Thank you so much, Michael. Thank you to the BOEDC office for your generous funding and sponsorship. And now I want to give a warm welcome to tonight's presenters. First up, we're going to have Rachel Batista from Paralegals for the Community, a wonderful small business of a dynamic sister team who's doing amazing things for small businesses around our borough. And then she will be followed by the Bronx tax man, Mr. John Cerini, and he'll be talking about choosing a business entity that works best for your goals, year-end strategies, save on your taxes, and New Year's resolutions, which I know I need to make a few of those, especially in the financial category. So really looking forward to hearing from both of our presenters this evening. And with that, I'm going to pass it over to Rachel. Thank you so much for being here. Take it away.
Good afternoon, everyone. It's a pleasure to be here today. Please interject at any point if you can't hear me or if I'm a little echoey. I'll try my best to reduce some of the noise around me today.
Oh, sorry, one more thing. And we will be holding questions until the end of Rachel's segment. So please put them in the chat and the Q&A, and I will administer those. And as soon as she's done with her presentation, we will queue those up for Q&A. Thank you.
Thank you, Sarah. So I run a small business with my sister / partner, Suani Batista. We have our main office in East 149th Street and 3rd Avenue in the Bronx. I am the tax specialist. I have many years dealing with taxes, of course, and helping the people of the Bronx. And we've run into a lot of the same concerns, and it's a lot of the clients really lack the knowledge of what entails in taxes, of course. And so I wanted to get into a little detail in talking about, what's the standard deduction, credits, because the average individual, of course, doesn't have the knowledge in, preparing a tax return, and taxes are very complicated. So the most important for 2021, I wanted to go over some of the changes that are coming for next year's tax filing season, of course. So post-pandemic, of course, there was a lot of changes that came into play, and that included the Consolidated Appropriation Act of 2021, which of course made changes to the standard deduction and a lot of the credits that many taxpayers can choose to deduct or choose to choose as a credit on their tax return. And some of those are, of course, the advanced child tax credit that was given to a lot of tax filers this year. And so what that is, the government raised the child tax credit to $3,000 as opposed to last year from $2,000. And what that did is give an advance to individual filers, of course, who are qualified, and that phases out of incomes for single filers of $75,000. And what that does is, for any single filer, and this is just an example, for any single filer who has an income of $75,000 or less is able to qualify for that credit for children. And for those $3,000, they gave payments starting in July until the end of December of $250 for any children that are 17 and under, and then $300 for children that are 6 and under. And so what that did was they broke that down into monthly payments from July to December. And so what I've been recommending my clients to do is to reconcile those payments, because a lot of the times what's happening is that tax filers have anticipated to earn more than what they usually do. And at the end of the year during tax season, they have come to realize that they no longer either qualify for those credits or end up having a balance due. So what the IRS has done is they do have a portal now that's called the Child Tax Credit Update Portal, where you can log in and you can basically manage your payments. You can see how much you've been paid or you can seize those payments. So you know exactly what to report during tax season, of course, which starts at the end of January of 2022. Okay, so that's the first recommendation I have for tax filers right now, is to reconcile those tax payments for anyone that has qualified for the advanced child tax credit. The next thing I wanted to talk about was the standard deduction changes in 2021. So for those that don't know, of course, the standard deduction is a set figure from the IRS that reduces your taxable income. For example, if you are reporting $100,000 as a single filer, your standard deduction in 2021 reduces your income by $12,550 automatically, okay? Now, a lot of filers benefits them to take the standard deduction because they don't really need to itemize their return, which is just listing all your expenses by detail. And so the standard deduction in 2021 has of course been adjusted for inflation, is up from 2020 from 12,400 to 12,550. And again, this is just an example. Of course, there's different tiers for every tax status you filed. So for a single filer, it is up from 12,400 again to 12,550. And for a married couple, it is up from 24,800 to 25,100. And again, that reduces your taxable income by that set amount. And now another thing I wanted to talk about was a nice tax break that was extended as well into 2021, which is the extension of the $300 deduction for charitable contribution donations, which means even if you do not itemize your deductions, which is something that a lot of tax filers could not have done before, you can deduct up to $300 of any donations that you've made in cash. And that will also help deduct and reduce your taxable income. And a lot of tax filers, and again, you always want to choose a tax preparer who's going to provide you with all of this information, just to kind of, evaluate your case and see what credits and deductions you qualify for. And a lot of tax filers were not aware that they qualified for this deduction last year. And again, it's been extended for this year. So this is a nice tax break. Even it's a small amount, but it does help reduce your taxable income by $300. Okay, what's also been extended for 2021 is for businesses to be able to deduct 100% of certain meal expenses. So again, this was extended for 2021. There's still a lot of changes that are going to be made to this bill. This can expire for 2022. It can be an option to extend all of this as well for 2023. But these are all some nice extensions that were brought into 2021. I wanted to go over some of the tax brackets as well that are always adjusted for inflation. For 2021, the tax brackets do remain the same. So it's 10%, 12%, 22%, 24%, 32%, 35%, and 37%. But because of inflation, the income levels for each of those tax brackets has increased. For example, for a single filer in 2021, 10% of your income will be taxed only up to $9,950. In 2020, that income was only up to $9,875. So of course, it's a minute amount, but it is adjusted due to inflation. Okay. I wanted to go over some of the important filing deadlines, of course. For individual tax returns in 2022, the tax filing deadline is April 15, 2022. There are no exceptions right now. I know that because of the pandemic, the IRS had extended automatically all filed returns up to 3 months. That is no longer the case. All tax returns for individuals are due April 15, 2022. S corporations and partnerships have to file their tax return by March 15, 2022. That is also the deadline to file an extension. The same for individual taxes that are due as well. April 15 is also your deadline to file an extension. C corporations taxes are due the same as individual tax returns that are April 15, 2022. That is also their deadline to file an extension. If anybody has any questions, I am more than happy to answer.
I don't see any in the chat or the Q&A at the moment. I do have a question though. I actually have an LLC I started quite a while ago for some of my side gig income. The quarterly filing deadlines remain the same as well?
They do remain the same, yes. Yeah, they remain the same.
As far as we know now, there's no extension to those, much as there's no extension for the regular individual filing, right? That's been announced yet. Okay.
Yeah, that hasn't, no changes for that have been announced yet.
Okay, I see a question from Natalie. I have a question. Why do you encourage stopping payments for the child tax credit? I'm not sure you said that, so.
Yeah, no, not necessarily stopping payments, is to reconcile your payments. So if you go onto the portal, you can see what payments have been paid to you. And that way, when it's tax season, you claim the correct credit. So for example, there's a lot of people that haven't been paid the correct amounts. So you can claim the remaining credit on your tax return next year. Or, which I want to hope is not the case for a lot of people, where, like I mentioned before, you know, a lot of employers have given the opportunity for employees to make a little more money. There have been a lot of raises this year, trying to keep employees or to get them to come back to work. And so a lot of people are anticipating to make more money than what they usually do. So if that is the case, then you either will not qualify for the advanced child tax credit, even though you have been paid. So during tax season, you might have to pay that back. So that is why I encourage a lot of filers to go into this website, reconcile your payments, see what payments have been paid to you. You can also manage your payments. So well, it's a little too late now because the last payment was today. I'm sorry, yesterday. But please go into the portal. You can manage your payments.
Can you put that in the chat, Rachel? Would you mind just putting the portal web address in the chat for everybody?
Yeah, I'll put that in there.
Thank you. Okay, I don't see any other questions at the moment.
Let me put that in there.
But thank you. That was a lot of very specific information. Oh, here comes a Q&A. Let's see. Okay, we have a question coming up from Felix that I think will be addressed by Mr. Cerini's section in just a few minutes. So
yeah,
sit tight, Felix. All right. Okay, Rachel has put the portal link into the chat. So
yeah, so that'll take everyone directly to the portal. The IRS has implemented, they have partnered up with ID.me. So in order for you to check those payments or to manage your payments, you do have to create an account with ID.me, which is a longer process, but I do recommend everyone to please do that.
Great. Does that conclude your presentation?
It does, yes. Like, again,
Wonderful.
taxes are very complicated. If I were to go into detail of every little thing,
Oh.
we'd be here for a week.
I'm sure.
So I tried to just briefly go over the most important details of tax season for next year.
Wonderful. Okay. Here's another question from Felix. What are the benefits of filing with a tax professional as opposed to TurboTax? I'm assuming that's especially from a business owner perspective, not an individual. But you could speak to both if you'd like.
Yeah, of course. And so I'd like to think so. And I tell a lot of my clients is that the person-to-person interaction beats behind a computer. You know, a lot of people, and again, a lot of people, it's faster to get your questions answered. A lot of the time, people just don't have the time to get it done on their own. And it's better to speak to a tax professional to give you all the proper questions and answer your questions properly. And we have the knowledge and we're prepared, of course. We have to take annual assessments each year to get credited and qualified to be a tax preparer. So speaking with a tax professional personally beats, of course, behind a computer.
I'm sure there's a lot of AI, right? The artificial intelligence, the automatic responses and things it's impressive, but also, you know, it's not perfect for sure. So it might take a while to get to the root of your answer
Exactly.
with a machine, right? All right, so Anthony, I see your question, and Mr. Cerini is going to want to answer this one live as soon as he jumps into his presentation. So I think that's going to be right about now. So awesome. All right, thank you so much, Rachel, for all of that information. It's a lot to take into account. I do hope that you know, our attendees will consider going with a tax professional, especially this year when so much is changing at lightning speed and there's so much going on as far as changes, and it's a lot. So I hope everybody will avail themselves of our local small business professionals such as yourself and Mr. Cerini. If you wouldn't mind, please putting your contact information, and when you put it into the chat, just make sure it's to everyone so that they can have the benefit of your expertise and get in touch with paralegals for the community, should they choose. Thank you so much. All right, so I think we're gonna head on over to Mr. Cerini for his presentation. Thank you so much again, Rachel.
Hi, everyone. My name is John Cerini. I am the owner of Bronx Taxman. We are a family-owned and operated business. My father started our tax business in 1974 under the name of Cerini Income Tax, and years later, I pretty much for the same reasons we're talking about today, we converted to a corporation for protection, and so we are now officially known as Bronx Taxman many years later. I just want to go back to one of the questions that one of the people had as to what's the difference between TurboTax and using an accountant. You know, using a tax professional like us, you know, we're here for you all year round. We don't, you know, try to get a real person on the phone, whether it's TurboTax or whether it's you know, one of these other online companies. You know, you'll never get the same person. They don't have the same invested interest in you as their client, where, you know, like when you come to a business like ours, I'm sure Rachel would agree with me, you know, we really care about our clients because our reputation means a lot to us. So we will bend over backwards to take care of you. But another great benefit is that we know the ins and outs. We know the tricks of the trade. So when you get a letter from the IRS, we always tell people, don't just pay the bill. You know, let the tax professional take a look at it, because that bill might be nonsense and we might be able to, you know, answer it right away and get the penalties or the interest removed, or it might just be a simple mistake that the IRS, you know, made. A lot of times there's there's errors reported to the IRS. So after talking between the clients, we can see that this bill is erroneous and we can fix it. Many times there are penalties with corporations for late filing, and the penalties can be excessive. They can be, you know, $250 a month per shareholder. So you can imagine if you have 3 or 4 shareholders, it can be $1,000 a month, and that can just compound with interest. So it can be excessive. So again, using a professional is well worth the money you spend on us, because we can help you to do it right and save money in the long run. So getting to the first topic, and what we'll try to do is we'll stop for questions. You can fill the questions in on the Q&A, and we'll stop for questions along the way. But what I wanted to do, because a lot of people don't know which type of entity to create, and it's important to start out right. Can you change to a different type of entity after you've already initially started? But then, you know, it's tough because you can't use the same name. So somebody who has, let's say, Bronx Taxman Corp. Can't go and use Bronx Taxman LLC, because the name Bronx Taxman is taken already. That's how the state protects us. So you don't want to build up a reputation and a rapport with the community and, you know, become the professional in the field and then have to change your name. So before you get started, you should analyze what is it that you're trying to protect, and you know, what type of entity is best for you. So for instance, if you're going to be doing something out of your house, selling something out of your house, so let's just say you're doing Avon or Tupperware, or, you know, you're doing a sales business out of your house, selling t-shirts, whatever it is, pretty much you don't have the same liability and risk that you would have having a storefront. And then again, you know, I would always tell, by the way, I'm a licensed New York State insurance broker as well, but I tell everybody, I don't care whether you're working out of your house or whether you're working out of a skyscraper in Manhattan, you should always buy an insurance policy, because you want to make sure you're protecting yourself. So if you're doing hair out of your basement, or you're doing hair in a beauty parlor on East Tremont or Grand Concourse, you should still have an insurance policy. Some insurance policies are a lot less expensive than you would think. People get scared of the cost of something before they know the cost. So do the investigation and find out what it would cost you. So if you don't have the type of business that's a high risk, then a sole proprietor may be sufficient for you. So it's very easy to start a sole proprietor. Legally, what you would do is you would go to the county clerk's office in the Bronx County Courthouse, if that's the county in which you're starting the business. But if not, you go to the county clerk in the county in which you're starting it, and you would tell them you want to do a DBA, doing business as, or also known as a sole proprietor. And basically, they give you permission to use this name. Then, you know, from that point, you would get a tax ID number with the Internal Revenue Service. You go open up your bank account, and then you should keep everything separate. Even if you're doing a sole proprietorship, you should still keep your bookkeeping and accounting separate from your personal. One of the questions on the tax return, if you're doing a sole proprietor, is do you have separate books? The answer would be yes. If you say no, they're going to say, well, then how do you segregate things? How do you know what's personal versus business? So I would always suggest people keep a separate bank account for the business, even if it's a sole proprietor. And then, you know, you have to keep in mind that there's other very important things that even sole proprietors have to keep in mind for business taxes. You know, if you're selling items, you have to file sales tax returns. Every 3 months, the sales tax is going to be due. So you got it in March 20th, June 20th, September 20th, and December 20th. You have to pay sales tax for the items you sold. So when you sell an item, let's just say you sold it for $100, you have to add 8.875% on top of that, and that money is not yours. So the customer will give you $108.88, but $8.88 is not yours. You keep it on the side. The state wants you to pay it every 3 months. So that goes the same for whether it's a sole proprietor partnership, SCorp, SCorp, LLC. If you're selling items, you have to pay sales tax. But a lot of times people think, well, I'm just a sole proprietor. Why do I have to pay sales tax? Not only do you have to pay and collect sales tax, you have to register for the sales tax. So keep in mind, you have to file a form called the DTF-17 with the New York State Department of Taxation and Finance. And you're not legally allowed to sell your product until the state of New York gives you authority. So you will then receive a document in the mail called the certificate of authority. Without that certificate, technically you'd be illegally selling items in the state, which can come with a hefty fine. So make sure before you start selling anything, seek out that form DTF 17 on the state, New York State website. So the sole proprietor is the least risky type of entity, you know, that you would go with. So again, when you're first starting, if you want to test the waters, you want to see whether or not, you know, this is going to be a successful business. I would say, okay, I understand you don't want to go spend money because corporations cost money. You don't want to spend the money on the corporation. You don't want to go through the headache of having to pay an accountant or a bookkeeper. You could do things on your own with QuickBooks or something like that. But, you know, you would go that route. But still, keep in mind what I said. Get an insurance policy. Look into it. It's not expensive, depending on the type of business. I mean, if you're a contractor running out of your house, contractor's insurance is expensive no matter what type of entity you are. But that's because you're dealing with tools, ladders, heights, things like that. But then the next type of business is going to be a corporation. Now, a corporation comes in various forms. You're going to have the C Corp, the S Corp, the LLC. So the C Corp is separate and distinct from the individual. So you could have one owner or 10 owners who own the C Corp. The owners of the C Corp are not going to be, it's not what you call a pass-through entity. So the other types of corporations, the LLC and the S Corp, the profit or loss from the business is going to filter into your personal taxes. But with the C Corp, it doesn't happen. So the C Corp is kind of an antiquated, old-fashioned type of corporation. A lot of people don't like using it. And the primary reason is that there is something called double taxation. So you pay tax on the corporate level, and then you pay tax on the individual level. So nobody wants to pay taxes, period. Why would they want to pay double tax? So, however, the C Corporation, in many cases, people will want to do it because they want to keep everything separate. They don't want to be, they don't want it to have it roll over into their personal. Sometimes people's incomes are already high enough as it is. They may not want to pay the extra income on that C Corp. Sometimes they want to keep the money in the C Corp and reinvest it. So there's many reasons why you would want to be a C Corp. Most people don't do it today. Then there's the S Corporation. The S Corporation is probably the most popular type of corporation because it's a pass-through entity, and the income will pass through to the individual. Now, again, remember just how I said before, how you can't sell things in the state of New York until you get permission from the state. With an S Corp, you have to get permission from the Internal Revenue before you can be considered an S Corp. Not everyone, when you start a corporation. So a lot of people go to LegalZoom or these online sites because they want to start their corporations, but you're not automatically an S Corp when you start a corporation. So let's say you want to start a business, ABC Corporation, and you think, well, I'm automatically an S Corp. I'm going to operate as an S Corp. It's going to pass through to me at the end of the year. It's not going to happen. The government, the IRS gives you 2.5 months from the time that they give you 75 days from the time that you start that corporation to get permission. And what you have to do is fill out a form called the 2553 with the Internal Revenue Service, or and you have to complete a CT6 with the state of New York. So these forms will say to the government and to the state, hey, my name is, and I want to be an S Corp. Typically, they won't reject any application unless you're delinquent in your taxes. Then they will say, well, we can't approve it because you have not filed your personal or business taxes, or you had a company in the past and you neglected your taxes, and therefore we can deny you. But typically, if you're in good standing, they'll approve everybody. If you've missed the deadline, if you've missed that 75-day deadline, you can request an exception. And again, in many cases, the IRS will approve that exception, especially if you have a good reason. And let's face the fact, right now with what's going on with COVID, best reason, you couldn't get a hold of the accountant, you couldn't find the research online, most likely the IRS is going to be compassionate and say, hey, we know what's going on in the world. will grant your request for the extension and will approve your S corporation. So now once you're an S corporation, you are getting the benefit of the pass-through entity where the profit or loss is going through to your personal. So hypothetically, let's just say that you have full-time job. Let's say you have a school teacher who's starting a business to be a tutor, and the school teacher has a full-time salary getting a W-2 form at the end of the year, but the tutoring business is her side corporation. So if the tutoring business has a loss of $10,000, then the $10,000 can be offset against the W-2 from the Board of Education. So it's a way to pass that loss down and get the deduction on your personal tax return. However, there is a caveat that the IRS requires that S corporation owners take a reasonable and customary salary based on the type of business they are. So what does that mean? It's a vague term and it can be disputed. But if you're a contractor who typically will make $100,000 a year or $200,000 a year, then the IRS will expect that at some point in your future, maybe not right away because you just started this business, but at some point in the future, you're going to be expected to take a customary salary for that industry. So what does that say? That says that while you don't have to pay Social Security and Medicare taxes on your profit, so if your profit was $50,000, Social Security and Medicare taxes are 15.3%. So you're going to save about $7,500, but you have to take a small payroll. You can't just take the whole thing as profit. You can't say, well, I had $100,000 profit, I'm not paying Social Security tax. Now on $100,000 profit, you should have taken at least 30 to 50% in a payroll so that you can say, I took a reasonable and customary salary. The whole thing is not profit. So that's on the S corporation. On the S corporation, as long as you have under 100 shareholders, you can remain an S corporation. On the LLC, it's similar to the S corporation that it can be a pass-through entity. However, the LLC is called a chameleon of corporations. It can shift, it can morph, it can change. So when you start an LLC, when you originally create it, you tell the government and the state of New York how many shareholders there are, how many partners there are. If there's one partner, it becomes a sole proprietor for the tax purposes. So you file that Schedule C, which is what a sole proprietor would file, Schedule C on their 1040 on their personal return. So again, simplicity, it's easy. There's no complication on going crazy with corporate taxes. You have the benefit of protection of the corporation, but the simplicity of the individual taxation. And then if there's two owners, then it becomes a partnership. And you know, you can, well, it becomes a partnership, which you file a 1065 tax return. And if there's two or more owners, you can opt to become an S corp as well. You just have to file the same documents, the 2553. And you would then become an S corporation. Now, most people would say, why would I file the LLC to convert it to the S corporation? It's a good question. I wouldn't. If I knew I was going to be an S corporation, I would just go straight with the S corp and not go to the LLC. But a lot of times people didn't know. They filed the S corporation. I'm sorry, they filed the LLC and then later on found out that the S corporation was the better one, and they end up converting, because you can convert. Now, what's the difference between the LLC and the S corp? The LLC is subject to Social Security and Medicare tax, which is 15.3% of profit. The S corporation is not subject to that. So if you had two identical businesses, let's say two pizzerias, and one started as an LLC and one started as an S corp, the guys with the LLC are going to be paying Social Security and Medicare. The guys with the S corp are not. So a lot of times people convert. I think I've covered the types of entities, and I know that there's a lot more to cover, but we don't really have a lot of time. So let's try to answer some of those questions.
Great. I see a couple in the chat. Do you pay sales tax on services? Do you pay sales tax on clothing?
Okay, so on clothing, absolutely, you're going to pay sales tax. I'm sorry. On clothing, it depends on the price of the clothing. So if the clothing is a low priced item, I believe it's under $110. I would have to look that up, but I believe that's the magic number. you wouldn't pay sales tax. But on merchandise, you're typically going to pay sales tax. But on services, most services are not taxable. It's only the one service that I could think of that's taxable would be hairstyling. You would pay 4.5% in the state of New York. If you own a parking lot, there is sales tax, even though you don't sell anything. When you pay people the fee to park in the parking lot, there's sales tax there. So typically, yeah, typically sales tax is not taxable on services. Like a financial consultant is not going to pay or charge sales tax. But services depends on what type of services. You know, like if you're selling something on the internet, then it depends on the state in which you made the sale, because now there's so many e-commerce rules that are changing that they're trying to charge sales tax in every single state, regardless of where you are. Used to be that you would only have to pay sales tax in the state that your business was, but now they're changing those rules that you have to pay sales tax if you sold something to somebody in Connecticut, New Jersey, Pennsylvania. If you haven't, I'm going to read that next one from Natalie. If you have an SCorp, you are not paying Social Security and Medicare on the customary salary, but you are paying it on the profit. No. If you have an SCorp, you're paying Social Security and Medicare on your reasonable and customary salary, but you're not paying it on the profit. I mean, maybe it seems like it's reversing your statement, Natalie. So let's say that I have an SCorp and my profit is 100,000, but my payroll is 50,000. I'm going to pay the Social Security and Medicare on the 50,000, but I'm not going to pay it on the 100,000. Is there any other questions there, Sarah?
There's the one right before it said, from Natalie, it said, is the DTF 17 the same as getting a certificate of authority from the state for your LLC?
Yes, so the state form is the same regardless what type of entity, whether it's sole proprietor, SCorp, C-Corp, or LLC. You still have to complete that same DTF 17. So it's very simple. You go to the tax.ny.gov and you can create an online account. It's very simple. Once you create that account, you'll tell it that you're trying to get a certificate of authority. It'll forward you to the proper web page, and then you can apply. Any other questions there?
I don't see any. Oh, wait. Nope.
Okay. All right. So let me talk a
one
little
more,
bit.
sorry.
Okay.
This came in the Q&A, not the chat. What happens if you know your business is going to grow? Should you use an LLC or an SCorp?
So, you know, that's part of the strategy, is to figure out, because like I said, you can't just change. You can start as an LLC and then convert to an SCorp later. That's legally allowed. You can't start as an SCorp and convert to an LLC. They don't allow that. Let me tell you one thing that I forgot to mention on the LLC. LLCs are more expensive to incorporate because of the limited liability characteristics. So the state of New York is one of the states that requires something called publications. So when you incorporate, you have to publish your intentions to start this LLC, and you have to then go to the state will dictate to you which newspapers you're going to be publishing your intentions. And you can imagine if you're publishing in Wall Street Journal, New York Times, you know, certain newspapers are going to be pretty expensive to publish in. If you're lucky, you'll get the instruction to publish in less expensive local newspapers. But again, this is one of the benefits of going to a tax professional, because we do it so often. We have arrangements with the state and public and publications so that we can get it done at a more reasonable price. But basically, if you're going to become an S corporation, then don't waste your time publishing, because you're going to spend hundreds to thousands of dollars doing the publications, where the S corporation doesn't require the publications. So if you're an LLC right now that has not done your publications, you don't have the protection of the LLC that you think you have, because you never published. So if you're an S corporation that didn't do the publications, you might want to consider converting to an S corporation. I see Felix has questions about the cost to open an SCorp. I mean, I think if you go to certain websites like LegalZoom and things like that, they charge very low fees, but they don't do the gamut of services that accountants do. You know, like one of the things, like I said before, when you create a corporation, you're automatically, you know, it's an entity, and the entity is separate and distinct from its owners. So we call it the entity was born. It gets its own social security number called the tax ID number. So when an entity is born, it is a C corporation, and you have to request permission from the state and IRS. So LegalZoom won't do those forms. And all those other online sites won't do those forms. LegalZoom won't do the DTF 17 with the state of New York. Accountants do. You know, LegalZoom won't get you a corporate kit. They won't get you a corporate seal. You know, I mean, they'll typically give you the bare necessities that you need to open up your bank account, but they don't give you the advice you need, and they're not there for you later on. So look, I mean, you can get what you need to get from them, and that's good. I understand people are struggling in the beginning when you're first opening up the business, but I believe that if you're going to take this plunge and invest in opening up a new business, you need to really do your homework and get an accountant, because you need to be successful. And in order to be successful, you need to have the right people in your team. One of the people on your team is going to be a good accountant. So spend a little extra money, go to an accountant. I mean, the prices will vary. You're probably going to spend anywhere from, you know, depending on the accountant, anywhere from, you know, maybe 800 to a couple thousand, depending on what services they'll provide you. But if you go to a website company, they'll probably charge you a couple hundred, but they're not going to give you half as much as the services or advice that you're going to get from an accountant. All right, sorry, one more. If the publication is in one county and moved to another, do I have to republish? As long as it's in the state of New York, you don't have to republish, you're fine. So, but I can't talk for other states, because I focus only on New York State. So you need, if it's in New York State, then you're okay. All right. All right, let's jump in a little bit to the PPP. I wanted to just talk about the PPP loans. You know, that was something great that the SBA came up with, you know, they were able to help small businesses that were struggling due to people going out of business, not really going out of business, but not being able to open, for instance, restaurants and hairstyling salons and nail salons and things like that, unless they were considered essential. They were pretty much out of business, and either they were going to close their doors or this PPP was going to help them stay alive. There was a lot of turmoil going on internally, because if the employees were able to get unemployment and collect the extra funding, they were making more money for staying home than coming to work. The PPP money originally was set to help employers keep their employers on the books so that they wouldn't go on unemployment, but you couldn't force somebody to work and accept less money because they wanted to go on unemployment. They were afraid to go to work. They were afraid they would get COVID. So a lot of people were out there collecting unemployment. The PPP really bailed out a lot of small businesses and kept them afloat. So they were basically doing it where they were saying, what's your salary? Now, this is a funny thing that we were just talking about with the reasonable and customary salary. People who owned S corporations who were not taking a salary like they were supposed to, those people had a hard time getting PPP, because the first P in PPP is payroll. And if you're not taking a payroll, it was hard for you to prove to the government or to the SBA that you had payroll. So as long as you had payroll on the books and quarterly reports, I think you were referring to that before, Sarah. Quarterly reports are something called 941s, NYS 45s. That's the federal and state payroll tax returns. So the PPP was based on your payroll. So what they did was they took your payroll for the 12 months prior to COVID, and they divided it by 12 months and multiplied it by 2.5 months up to a cap of 100,000 for the owner. So hypothetically, let's just say you had 5 people, including the owner, and each person was earning $100,000. The cap was going to be $20,833 per person to collect on the PPP. And the first round of the PPP, they were going to have Originally, it was only going to be an 8-week program. So you had to use the money in 8 weeks. But then, thank God, they realized that there was no way that some businesses were going to be able to use that payroll in 8 weeks because they weren't even open for business yet. So they extended the 8 weeks to 24 weeks, which allowed a lot of businesses to use the money for 6 months rather than rushing it in 2 months. And then they gave us 10 months after that to get forgiveness. So and if you didn't get forgiven, which I think is pretty rare because I think most people were getting forgiven, but if you didn't get forgiven, it became a loan for 2 years at a very low interest rate. So it was a great program. Then they realized businesses were still suffering, so they came up with the second loan. And the second loan, they give you up till the expiration or the maturity of the loan to apply for forgiveness. So people who have gotten the second loan are still probably making applications for forgiveness right now. And there was a third loan called an EIDL, Emergency Disaster Loan, Economic Injury Disaster Loan. That they were originally, so many things changed, Sarah. The things are changing right before our eyes, where in our industry, you know, the government says one thing, the SBA says another thing, and all of a sudden, when we're knee deep into it, they're changing the rules on us. And now we're having to let our clients know, hey, sorry, things changed. And it was frustrating. So with the EIDL loans, they were giving originally, it was $1,000 per employee to help you get started, to help you stay on your feet, up to $10,000, which meant if you had 10 employees or more, they would give you an instant $10,000. And they were saying, this is not going to be a loan. We're going to let you keep it. It's going to be a grant. But then they changed the rules and said, well, we're not going to do that anymore. We're going to give you, the EIDL is going to be part of the PPP. We're going to subtract it from the PPP that you got, and you might have to pay back some of it. Recently, they changed the rules again to say, whatever you got in that first drawer, the EIDL, don't worry about it. So they keep flip-flopping. They keep going back. And I don't doubt that they're going to go back to different rules. But if anybody has problems with getting your PPP loans forgiven, again, what's the best thing to do is to reach out to a tax professional who has some experience in it. I mean, I'm not going to lie. There's really, you know, the PPP is such a new thing that people can't say they have 10 years of experience in it. You know, when it first came out, many accountants were scared to touch it because they didn't know what to expect. So if you have somebody like myself that was applying for people for PPP and has experience in applying for forgiveness, you know, somebody, I'm sure that there's accountants out there that can help you. But what I would suggest you do is don't wait until the busy time of tax season. Don't wait till February, March, or April. Get into an accountant's office before the end of January when they're going to be so swamped, and tell them, I have this loan. I'd like to see if I can get it forgiven. Can you please help me? I'm sure that there's people out there that are willing to help you get it forgiven. Are there any questions about the PPP?
I don't see any PPP specific questions, but they'll probably pop up in a moment or so. I do see a couple of other questions. What's your take on the ERC credit?
I do see the other one. Let me address that one. Do you have to file quarterly taxes if you're self-employed individual? Only if you have employees. If you're self-employed under a sole proprietor, then your payroll is your profit. So there is no payroll per se, because you're going to pay. So one of the things we were talking about before, the benefit of having an S corporation is the profit is exempt from Social Security and Medicare. However, on a sole proprietor, on a partnership, on an LLC, that's not a S corporation, you're always going to have to pay Social Security and Medicare tax on your profit. You don't have to take a payroll on a partnership, a sole proprietor, and an LLC. That's a partnership. You know, but on an LLC that's an SCorp or an SCorp, you will have to take payroll. So the answer to your question is if you don't have other employees, then you don't have to file payroll tax. As far as the employee retention credit, you know, there's so many different, you know, opinions on it. I haven't been a big fan of it because if you were paying your employees during COVID using the PPP money, you know, while it does say that in some instances, and let me tell you something, if you try to call the IRS tomorrow and get somebody to pick up the phone and answer a question on this, they're not even going to give you an answer because they're going to say, sorry, due to the complexity of your question, we can't answer that question. So there's too many different versions of the right answer. And that's the problem, is that we don't know if you're double dipping, because in any instance, the government doesn't want you to double dip. You can't get a credit for something you never even paid for. If you were paying your employees with PPP money, can you get the employee retention credit? There are some experts that believe you can. I tend to err on the side of safety and say, I'm not going to try to get my clients in trouble by double dipping. So I would say if you're getting the PPP or if you got the PPP, stay away from that credit. But again, seek out the advice. You guys can call my office. I'll put in my information. You can let me know your personal situation and we will evaluate your specific situation individually. All right. All right. So let's go. Oh, by the way, I wanted to tell you guys quickly on the deadlines. The deadline to file your taxes on a sole proprietor is the same as the deadline for an individual. It's April 15th. Now, as Rachel said before, there is no extension right now, but over the last 2 years, they've extended tax season both years. Once it was extended all the way to July. It was the longest tax season we ever had. And then last year they extended it to May. But this year, as of now, there's no extension. But if we should get a spike in COVID or any type of catastrophe happens in the world, you know, there's most likely a chance that they'll extend it again. So sole proprietors and SCorps have the deadline of April 15th. SCorps that end on December 31st. So the one thing that makes a SCorp different, one of the many things that makes it different from the SCorp, is that a SCorp is based on a fiscal year. That means that it ends 12 months from the day it started. So if you start a SCorp, let's just say June 10th, it's going to end May 31st. It always goes to the last day of the 12th month, right? So if your SCorp ends on December 31st, they give you the 3.5 months to file your taxes, which is April 15th. But with S corporations, with LLCs, and with partnerships, they recently changed the law that now it has to be filed by March 15th. And the reason that they did that was simple. It was because you need the K1 from the LLC, the partnership, or the S-Corp. The K1 is the document that filters the profit or loss from the corporation to the individual. So you need that K1 in order to file your personal, which remember is due April 15th. So if you didn't have it until April 15th, then you could never file your taxes and you're gonna have to file an extension. So now by changing the deadline to March 15th, that gives you a full month till April 15th to file your tax return, your personal taxes. Okay, so I just wanted to get that out of the way.
One more question that came in. Do you have another segment?
Yeah, you could. Well, I just wanted to run through some strategies of how to prepare for the new year. Is there another question you were saying?
Yeah, it's from Karen. What about if I have independent contractors and I have an LLC? What taxes do I have to pay?
Oh, so from what I'm understanding it, you're the owner of a business and you have an LLC. I mean, you have an LLC, you're the owner of it, and you have independent contractors. So you have to be careful. This is a touchy situation with the Department of Labor, because If your independent contractors are not by definition independent contractors, you can get violations from the Workers' Compensation Board, from the Department of Labor, because you are required, when they are by definition an employee, you're required to collect Social Security, Medicare, disability, unemployment, and you're supposed to treat them as an employee. So a lot of people pay their employees as independent contractors because they think they can get away with not paying all those extra taxes. And as you can imagine, you're going to save a lot of money. Unemployment might be 5% of the person's salary up to the first, like, I think 12,000 now. The workers' comp, depending on the industry you're in, it's going to be pretty expensive if you're, like, let's say, a contractor. And disability, and then you have other taxes like paid family leave and things like that. So they try to protect the employee's interest by saying if the employee is not an independent contractor, you're going to be in violation. So hypothetically, let me just say, who is the best independent contractor? A real estate salesperson. Now, what makes an independent contractor is they have to dictate their own hours. They do things the way they want, when they want, where they want. So a salesperson for a real estate office, they make the appointments with their clients. They show it when they want. They show the house when they want, where they want, how they want. They do it all on their own. That's a true independent contractor. But if, let's just say you have a secretary that works for you for 3 hours a day, and you're saying, well, I'm going to give you $15 an hour, but I'm going to put you on a 1099. That's not an independent contractor, because you dictate to her that she comes to your office, or even if she works out of her house and she's answering the phone remotely, you're telling her where to work, when to work, how to work. She's an employee. So be careful. But if your independent contractors are truly independent contractors, then you're going to file your LLC. So if you're a sole proprietor or a partnership or an S-corp, you're going to file your taxes, and you're going to deduct your independent contractors as labor. There's a line on the tax return that says independent contractors. However, you have to make sure you fill out the 1099s at the end of the year. Independent contractors get a 1099 NEC. W-2 is given to an employee. So you have to file a 1099 NEC for each independent contractor, which then all the independent contractors totaled up get filtered into one 1096 form. So again, these are things that the accountants know. I don't expect you guys to know it or even remember it, but these are all things that are available on the IRS website. But it's very important. You can't just pay somebody and then write them a letter saying, I paid you $10,000, go file your taxes, because the IRS is going to audit that person, because they look for correspondence. So if you said you paid somebody $10,000, well, if they said they earned $10,000, the IRS is going to look throughout all the documentation that came into their records and says, nobody indicated they paid you $10,000. So where are you getting this money from? So you want to make sure you're doing things legally. You file a 1099 NEC, a 1096. If you're doing employees, then you have to file 941s every quarter. And then at the end of the year, you have to file a 940, which is a summary of the entire year. And then beyond that, you file a W-2 form, which then filters into a W-3 form. So there's tons and tons of forms. I mean, I could probably do the whole alphabet with different tax forms. But there's a lot to know. So if you guys have any questions, again, I'll put my my phone number in the chat, my address, my website, and you guys can give me a call. I will not charge for the consultation, so you can ask me all the questions you want on a private basis. So I just wanted to go through what I believe is some of the things that people tend to forget during the year, and then at the end of the year they're panicking. So so I wanted to go through. I'd written down some more notes. What did I do with them? Yeah, I got a little confused because I was going through my notes while Rachel was talking. But let me just talk about at the end of the year, people come into us and they have they don't have their documentation in order. And you can't just come in and say, I think I spent this much money on supplies. I think, no, you can't think, you got to know. So if you're doing QuickBooks, then get it done right and be careful, be very careful that you're entering the data correctly. You want to reconcile your books on QuickBooks. You want to make sure that things are flowing properly, because I've had a lot of clients that are very intelligent people and still they don't get their QuickBooks right. One of the first things when you go into QuickBooks is the QuickBooks system is going to ask you if you're a cash basis system or an accrual basis system. Now, most businesses in the United States are cash basis. The very few businesses are accrual basis. The only ones that are really accrual basis are going to be hospitals, churches, nonprofits, but typically most businesses are cash basis. What that means is you pay taxes when you receive the money and you deduct an expense when you pay the money. An accrual-based system says you pay taxes when you earn it, even if you didn't receive it. So imagine if you billed your client $1 million for a service you provided, but the client didn't pay you, and he may never pay you. He may never, the client may stiff you on the money, but you had to pay tax on it just because you sent out an invoice. So that's in kind of an idiotic way to do business, right? Why would anybody want to be an accrual basis system and pay tax on money they haven't received? So most businesses are cash basis. You pay tax when you receive the money, you deduct the expense when you pay the money. So make sure that you get your QuickBooks in order. If you're using an accountant, make sure that you speak to your accountant on a regular basis. It's very important that you and your accountant have a good relationship. The accountant needs to understand what you do, what you sell, what you service you provide. Many times there might be pieces of your business that we can pull out and, you know, you might pay different taxes. As a strategy for the end of the year, make sure, just like I said, you deduct your bills when you pay them. So make sure that if you have bills that are still outstanding that you've received from your vendors, pay those bills before December 31st, because they're going to be deductible on your 2021 tax return. If you pay them in January of 2022, the payment is posted in the next calendar year, which means you can't deduct them now. So a lot of people, for some reason, might be waiting, but don't wait. That's foolish. Track your mileage. If you're a realtor or if you're a salesperson, if you use your car a lot, track your mileage. There's apps. There's one called Mile IQ that you can purchase on the App Store. You should get that app or a similar app to it. I'm not endorsing any app. I'm just saying, if you don't do it yourself, then get an app, because the apps will do it for you. It's an automated service that your phone keeps track of how many miles you drove. That's extremely important, because remember, if you're deducting 56 cents a mile on your business, it'll add up. I mean, I have people that travel, 30,000 miles a year for business in their car as an independent contractor or sole proprietor. Those people get to claim it. But, so it will add up. Imagine 30,000 miles at 56 cents a mile. It'll be a lot of deduction. Keep all your receipts. Take photos of your receipts. Sometimes we tend to either lose the receipt can fade. I suggest you take a photo, you scan it, save it on a PDF, scan it into your hard drive on a flash drive, keep it someplace safe. A lot of these type of documents you want to save, got a bit of a fire or a flood. And we know with September 1st, many of us got flooded out. There are special benefits to depreciation. During COVID, the IRS is allowing us to accelerate our depreciation. So if you were thinking of buying a car or a computer or any type of asset, you might want to purchase it prior to December 31st, because you can get a greater benefit. So remember, an asset is something that has a useful life. So for instance, a car, if you spend, let's just say you walked into the dealership and you gave the dealership $50,000, the IRS is not going to let you deduct $50,000 in one shot, right? That's typically what the IRS would tell you, because that car is going to last you 5, 10, 20 years. So the IRS says, we're going to break that car down into many years for you, which is a good thing because in future years, you're going to get to deduct part of it, even though you didn't pay for it in those years. So, however, this year, the IRS is accelerating depreciation, meaning that they're letting you take a greater depreciation and write off more of your assets in 2021 and 2022. It's not extended yet for 2023. However, you know, because you might want to write off expenses for 2021, then maybe you might want to consider going to buy that car. A whole nother conversation we can have, and if you want, we can talk about it. You can call me separately, is about whether or not you should finance a car or lease a car. I could go on for another half hour about that, but give me a call if you're interested in talking about that. If you're a gambler, make sure you save your losing lottery tickets. Tell your family to save their losing lottery tickets, because when you hit that one number, you're going to need losing lottery tickets. The government only lets you claim losses. I mean, yeah, you can only claim losses up to your winnings. So, but the problem is if you hit $10,000 in casino, but you have no proof of what you lost, then you can't deduct any of it. So keep all your losing lottery tickets. Make sure that you also have all of your W-2s and 1099s. And that doesn't just mean only 1099s for wages and W-2s for jobs. That means 1099s for dividends, for brokerage sales, if you sold stock or bought stock, or if you have 1099s for interest from bank accounts, or if you have 1099-Rs from distributions from 401ks, retirements, annuities. So make sure, try to just jot everything down on your paper before you go to your accountant and say, what money did I earn? Go through your bank statements, look at the income you earned, because once your tax return is filed, it's filed. Then what's going to happen is the IRS is going to say, hey, you forgot to report the $5,000 you took out of the John Hancock annuity. And then you're going to go, oh, I totally forgot about that. But your accountant didn't know, so your accountant didn't put it on the return. Your accountant is then going to charge you a fee to file an amended tax return, which he has the right to do because he's doing more work. So please try to put everything in order and make sure that you get all that together for the accountant before you go. I think I covered everything that I wanted to cover, and I'm sorry because I know I can go long, but I have so much more information that I could share with you, but we only have so much time.
I think you've really just kind of proof in the pudding that we should all have tax professionals in our corners. As you said, this is very complicated and detailed. And for those who are actually running their businesses that don't have time to become subject matter experts like you, they need to hire them. So I think that's, to that point, there was one more question. Amen, Francisco. To that point, any final words, please put your contact info in the chat as well. And any final words on, again, you might be a little biased, but what our attendees should be looking for in an accountant?
Well, I'm putting down in the chat right now that I'm an enrolled agent with the Internal Revenue Service. So one of the things that you want to look for in your accountant is somebody that has some type of licensing, or, you know, because it's one thing, anybody can go to a 3-week H&R Block or Jackson Hewitt course, and anybody can study on their own. It doesn't make them a bad person, but they didn't have to go through the rigorous exams and tests, and constantly every year I have to go to school to continue to keep up with the trade. So you want somebody who is licensed and keeps up with what's going on with the trends. So either get a CPA, get an enrolled agent, or find somebody, and you know, you have the right to interview that person. You know, many times when clients come in, one of the first things they'll do is they'll sit down and interview me. How long have you been doing this? Do you do your own taxes? I love that question. Do I do my own taxes? And my answer is always, of course I do my own taxes. As a matter of fact, my dad was an accountant. So when I was 14 and I had my first job, I came home with the W-2 form that my boss gave me, and I was so excited. I go, Dad, I got my W-2. What do I do? And he goes, do your taxes. And he supervised me He supervised me in doing my own taxes. So I've always done my own taxes from my first W-2 form. But
From birth, practically.
these are valid questions, you know, ask the accountant, how long have you been doing this? What type of degrees do you have? You know, can you help me in the event that I'm audited? So my license as an enrolled agent with the Internal Revenue is that it authorizes me to have unlimited powers of representation, unlimited rights of representation for my clients throughout the entire United States. So I can represent clients in, you know, literally every state in the United States, and before the Internal Revenue Service. So you want somebody who can represent you when there's a crisis. You know, I hope there's never a crisis, but if there is, and you went to H&R Block, or you went to Jackson Hewitt, you went to one of these chains, are they going to be there? If you use TurboTax, are you going to have somebody to take care of you? You know, we're open 12 months out of the year. During tax season, I'm open 7 days a week. The rest of the year, I'm open 6 days a week. I hardly take vacation. My wife and children want to kill me. But when you're on your own business, and this is what we're talking about, when you're on your own business, you really put everything you got into the business. And when you succeed, you're proud of it. You look back at the sacrifices you made, but they're definitely worth it, you know, because you know everything you've been able to accomplish. But I'll tell you one last thing. It's just a funny story. My father I remember being a little boy going to his office, and one time a man said to my father, he was, at the time, there was no computers, remember? Computers really didn't become a thing until the 80s. And that was the late 80s, and they were very expensive. So at the time, my father's sitting there with a pencil and a calculator. The man was like, show me what you're doing. Tell me what you're doing. Explain to me what you're doing. And my father would say to him, what do you do for a living? And the man would say, I'm a painter. And my father would say, you do your painting, let me do the taxes. Because when I come to your job, I'm not going to ask you how you doing it, what brush you're using. You know, like if I hire you to be my painter, you're going to be my painter. You'll be my plumber. You'll be my electrician. You'll be the nurse. You'll be the doctor. You'll be the lawyer. Let me be the accountant. You know, if you choose somebody who's a true professional, then, you know, you can ask them the questions, but ultimately, hopefully you trust in them and they'll guide you in the right direction.
Well said. Thank you so much. We have gone a bit past time, but well worth it. You've really provided a wealth of information, and thank you so much for your time today and providing these gems and great food for thought. You know, again, for anybody who is on the fence about whether or not it's time to bite the bullet and get with a professional, I think we have our answer. So thank you so much again, John.
No problem. Thank you very much.
Troy,
Thanks for having me. I appreciate it.
Visit our YouTube page. Follow us at the new BxCC. Francisco, throw that in the chat, please, real quick. That's where we're going to have the replays. We have the replay from the 14th, which was our first session in this series. And we will also have the replay of tonight as soon as we can get it up there. So it'll be the next day or so. All right, everybody, have a wonderful evening. We're getting into dinner time, I know, so I'm hungry. Thank you again for your time this evening, John. And Rachel has departed, but we'll send our thanks to her as well.
Okay, thank you.
Great. All right, we'll talk to you soon. Happy holidays, everybody.
Happy holidays.
All right, and thank you, Michael. All right, take care, everyone. Bye-bye.